NIO stock just delivered one of its strongest sessions in recent weeks, closing at $5.54, up 47 cents on the day, a gain of more than 9%. What makes today's move stand out isn't just the percentage gain, but the context in which it happened. We're heading into the Jackson Hole Symposium, where Federal Reserve Chair Jerome Powell is expected to deliver a market-moving speech on the outlook for monetary policy. Normally, that kind of macro uncertainty weighs heavily on growth names, particularly in the electric vehicle space. Yet despite the subdued market backdrop, NIO not only held above the critical $5 level for a third consecutive session, it extended those gains decisively. That kind of resilience signals something more than just short-term technical buying. It suggests a fundamental tailwind, and that tailwind has a name, Onvo. The Onvo L90, NIO's mass-market SUV, is increasingly being seen as a game-changer for the company. Analysts have been warming to it in recent weeks, and today we saw a concrete catalyst in that direction. Macquarie upgraded NIO to Outperform, citing the strong reception to the L90 and its potential to capture significant share in the mid-range EV market. For NIO, which has long been positioned as a premium EV maker in China, the move down market through the Onvo brand is crucial. It allows them to tap into a much larger pool of buyers, especially at a time when Tesla and BYD dominate the conversation. The upgrade wasn't just about the car itself, it was about the backlog, the early signs of demand, and the confidence that NIO is finally entering a harvest period, to use the words of CEO William Li. That phrase, harvest period, really matters here. For years, NIO has been criticized for burning cash, investing heavily in infrastructure like battery swap stations, and struggling to achieve profitability. The narrative was always that NIO was laying the groundwork for future success, but the market has grown increasingly impatient. What we're seeing now is a shift. Deliveries have been ticking higher, Onvo pre-orders are strong, and management is positioning the company as one that is moving from setup to execution. That's why Macquarie's call resonated today, and why NIO was able to outperform even when the broader tape was weak. Let's also look at the technical side of the move. The $5 level has been a major psychological barrier for NIO. Every time the stock approached it over the past few months, sellers would appear, and the price would retreat. Closing above it once might have been dismissed as a fluke. Doing it 3 sessions in a row changes the dynamic. Traders now see $5 not as resistance, but as support. That flips the psychology and opens the door to a test of higher levels. The next range to watch is around $5.75 to $6, which represents the next meaningful area of resistance. If momentum carries through, especially on strong volume, we could see that test sooner rather than later. But we should be cautious here as well. NIO remains a highly volatile stock, subject to swings not only from company news but also from macro conditions and sentiment toward Chinese equities in general. The Jackson Hole speech tomorrow could easily shift the tone across markets. If Powell leans hawkish, growth stocks may come under renewed pressure, and NIO is not immune to that. At the same time, if he signals patience, that could provide the perfect setup for NIO to extend its recent rally. Either way, what's different now is that NIO is showing strength even before that catalyst, which tells us that buyers are already willing to step in. Another factor at play is short positioning. NIO has been a heavily shorted stock for some time, as investors bet against its ability to compete in a crowded EV market and against the broader challenges facing Chinese companies. But as the stock has reclaimed $5 and pushed higher, some of those short sellers may be forced to cover, adding fuel to the upside. That doesn't mean the stock will shoot to $10 overnight, but it does add a layer of momentum that can keep rallies alive longer than expected. It's also worth noting that NIO is beginning to benefit from diversification. The company has leaned hard into its battery swap infrastructure, which initially drew skepticism but is now being seen as a differentiator. Partnerships and government support for EV charging and infrastructure in China are helping validate that strategy. Meanwhile, the expansion into Europe and the potential to bring Onvo to international markets add optionality that investors can't ignore. These aren't immediate profit drivers, but they build a narrative of growth and differentiation, which is important when sentiment begins to shift. We also can't forget the broader geopolitical context. The Russia-Ukraine peace talks have shown some modest progress recently, and while they don't directly impact NIO, they do affect risk appetite in global markets. If tensions ease, risk-on trades like EVs and growth stocks in general stand to benefit. The fact that NIO is already gaining into that narrative makes it a prime candidate for further inflows should geopolitical risk subside even a little. So where does this leave us heading into the weekend? First, we have a technical breakout above $5 that's holding. Second, we have a fundamental catalyst in the form of an analyst upgrade tied directly to NIO's Onvo strategy. Third, we have management signaling that the company is entering a harvest period, which reframes the narrative away from losses and toward execution. Fourth, we have a macro wildcard in Jackson Hole that could amplify or dampen the move depending on Powell's tone. And finally, we have an underlying short squeeze dynamic and diversification story that add further fuel to the fire. For investors and traders, the key takeaway is that NIO is no longer behaving like a stock on the defensive. It's showing resilience, it's attracting positive analyst attention, and it's finding support at levels that previously acted as ceilings. That doesn't mean the risks are gone, far from it. NIO still faces intense competition from BYD, Tesla, and a host of other Chinese EV startups. Profitability remains elusive, and the macro picture is still uncertain. But the character of the stock has shifted, and that shift is worth paying attention to. As we head into tomorrow's Jackson Hole address, NIO's price action suggests that buyers are willing to look beyond the near-term noise and focus on the medium-term story. If Powell's comments don't derail sentiment, the path of least resistance for NIO may be higher. If they do, we'll learn just how durable this newfound resilience really is. Either way, NIO has put itself back on the radar in a meaningful way, and that's not something we've been able to say confidently in months. In summary, today's 9% surge wasn't just a lucky bounce. It was a statement that NIO is regaining credibility, both technically and fundamentally. The Onvo brand is gaining traction, analysts are taking notice, management is talking about harvesting rather than planting, and the stock is acting accordingly. Whether it can sustain that momentum will depend on what comes next from the Fed, from deliveries, and from the competitive landscape. But for now, the story has shifted, and that makes NIO one of the most compelling names to watch as we close out the week.